Emerging markets, once the darling of investors, are taking a backseat as one of the world's largest asset managers sounds the alarm on AI risks. BlackRock Incorporated's research arm has become cautious on emerging market stocks, and it's a significant shift in sentiment that matters to investors worldwide. The reason for this caution is the rapidly evolving landscape of artificial intelligence and its potential to disrupt traditional industries and economies. As AI continues to advance, the dynamics of global trade and investment are likely to change, making it essential for investors to reassess their emerging market exposure. This move by BlackRock is a clear indication that the investment landscape is becoming increasingly complex, and investors need to be mindful of the potential risks and opportunities that AI presents. The firm's bullish outlook on short and medium-term euro area government bonds, on the other hand, suggests that there are still opportunities for investors to generate returns in more stable markets. As we move into the second half of the year, it will be interesting to see how this shift in sentiment plays out and how investors respond to the changing landscape. Moving on to the US markets, it's been a remarkable quarter, with the S&P 500 on track to finish its best quarter in 6 years. This is a significant milestone, and it's a testament to the resilience of the US economy. The dollar has been climbing, and the yen has slid to its weakest level since 1986, which has implications for global trade and investment. This strength in the US markets is likely to have a ripple effect on other markets, and investors will be watching closely to see how this trend continues. The Pulse, a popular Bloomberg podcast, recently featured high-profile guests, including Torsten Slok, Jim O'Neill, and Tobias Adrian, discussing the state of the global economy and the outlook for the second half of the year. These conversations are always insightful, and they provide valuable perspectives on the key issues shaping the world of finance. As we look to the second half of the year, it's essential to stay informed and up-to-date on the latest trends and developments. In other news, Japanese companies are tapping deeper into overseas markets to finance their growth, with Mizuho Financial Group Incorporated and Sumitomo Mitsui Financial Group Incorporated leading the charge. This record-breaking quarter for foreign currency bond sales is a significant development, as it indicates that Japanese companies are becoming more aggressive in their pursuit of growth. This trend is likely to continue, and it will be interesting to see how it impacts the global economy. Finally, quant funds have suffered a significant setback, with momentum stocks flopping in recent weeks. However, asset allocators remind investors that it's essential to look at returns over a wider timeframe. Despite this recent rout, the sector is still significantly ahead of the S&P 500 and U.S. Treasuries so far in 2026. This is a valuable reminder that investing is a long-term game, and it's essential to stay focused on the bigger picture. As we close out the quarter, one thing is clear: the world of finance is constantly evolving, and investors need to stay informed to stay ahead. Tune in tomorrow when we'll be examining the impact of inflation on consumer spending, and don't forget to follow us for all the latest news and analysis from the world of finance.